No, Shani is there? A very good evening, ladies and gentlemen. We are yet back again with another session on mentoring SMPs. You are all aware that your board is working incessantly to ensure that we move in the right tandem. Our working has to be very commensurate with the expectations of the society at large. Our membership, which ranges close to 4 lakhs, and out of that, at least 50% are in practice. So the practicing members need to work in tandem with the working standards. They need to work in sync with the expectations of the industry and the society. And therefore, your board has taken this initiative to ensure that best of the people are available, best of the faculties come and guide you through the various issues. Lady, introduction of the faculties. Hold for a second, please. Let me put my screen online. उसको बना सकता हूँ. Ladies and gentlemen, we have 3 very versatile speakers of the day. The first speaker of the day is CA Vijay Lakshmi Suresh. She is speaking on the topic internal audit in VUCA word. She is a chartered accountant and is a finance professional with over 30 years experience in Tata Group, Voltas and Tata Sky, MNCs like Shell, Coca-Cola, Parker, Diversity and SCA Hygiene. Her domain expertise is in corporate finance, treasury, taxation, systems, risk management, and in internal audit. She is a mentor and coach and has conducted trainings for finance and non-finance personnel in basics of finance, corporate planning, code of ethics, etc. She is very passionate about internal audit, ethics, and corporate governance. Our second topic of the day is by Madam Anuja Ramdasi. She is dwelling on the subject enhancing your service offerings by CA. She is a chartered accountant with over 15 years of progressive experience in areas of risk management, internal audit, corporate governance and compliances. She has a varied work experience in consulting services in the early days of her career. Over the last decade, after moving to industry, Anuja has been associated with IT multinationals and is recognized for her acumen of the challenges and opportunities of the IT industry. She has managed the internal audit and compliance functions of US IT multinationals, Allscripts, Healthcare's India's operations, and in her current engagement, she is the global head of internal audit for Persistent Systems Limited. She is also very keenly interested in leading the corporate audit function for Persistent Group. She is also speaking on the topic the growing relevance of enterprise risk management in business. He is a finance professional with over 30 years multi-sector industry exposure. He works with Blue Star as their group CFO. He is a CA, CS, and also a certified member of the Institute of Risk Management UK. His areas of forte are business process design, strategic financial management, corporate governance, ERM, and M&A. He possesses hands-on experience of talent acquisition, people development, and a consistent track record of building motivated and highly performing teams. He has worked with Max Bupa Health Insurance, Max India ICAI Technologies, Spice Telecom, and Scouts in varied financial roles. So before I call upon these revered dignitaries to speak, let me present to you my keynote address. Again, I'll apologize because I'll put that on screen. Hold for a second. So as you are aware that today's live webcast takes into consideration number of topics. There are 3 topics. The first is internal audit in volatility, uncertainty, complexity, and ambiguity. Ladies and gentlemen, you are well aware that these 4 areas encompass a person into confusion which is not able to clear. So what is UVCA? Why it is relevant to accountants and board of directors? You need to understand this, and this is very, very important. In today's business environment, the total focus when it comes to impediments, when it comes to problems, is largely on volatility, uncertainty, complexity, and more importantly, on the entire concept, how we have to bring out ways and means to get away from this thought process. Historically, internal audit practices were based on stability, on calculated risks, and a very nice environment where they could work. But today, we need certain different skill sets to ensure that we are able to perform in this complex world. Agile strategic characteristics such as roadmaps, minimum viable products, complemented by individual capabilities and scenarios, can execute the process and project in working in a mix of volatility, uncertainty, complexity, and ambiguity. So now, in this time when new leadership skills are there, we need a total new avatar, and the internal auditor needs to realize the breakthrough success in transformation. He needs forward-thinking strategies and transformation of the country's underlying functions and organizations in order to build the new sets of business capabilities to adapt volatility, uncertainty, complexity, and ambiguity. Now, what do you need? First, for volatility, you need virtuous people who are able to stabilize during the time of instability. For understanding, if you speak of uncertainty, so fear of unknown is best dealt with keeping an open mind and understanding things in the right perspective. And if you want to speak on complexity, your compassion puts the negative consequences of all unresolved issues at bay. And lastly, adaptability. Now, why do we need adaptability? It takes a global pandemic like COVID-19 to remind us that we are not the masters of the universe. Rather, we are a part of the universe. I'm reminded of a couplet which I would like to share with you. The couplet says, इंसानों की नहीं सुनती आजकल, इंसानों की नहीं सुनती आजकल, कुदरत अपने सुर में है. Please understand. Now, the entire thing is in the hand of nature. Again, a second couplet. जमीन पर शोर मचा था, हमारी हुकूमत हमारी मर्जी. Everybody said it is my area, my domain. जमीन पर शोर मचा था, हमारी हुकूमत हमारी मर्जी. फिर ईश्वर ने सबको बताया, मेरी दुनिया मेरी मर्जी. So far, if you want to ensure that ambiguity is put thrown out. You need to understand how you have to adapt to changing circumstances to face unnecessary hardship. The challenge is, what do? There is a second definition to again VUCA. V means vision. Yes, if you have a vision, you are able to take and conquer any such thing which comes. So U is understanding. When you understand things, ambiguity is thrown out. Clarity and agility, they are very, very important. So, VUCA people are very important for a VUCA word. We want to train our younger generations and new our SMPs and chartered accountants to see and understand the value of being UVCA. The second topic is internal audit, enhancing your service offerings. I have a career of spending over 30 years, and one thing I've understood, once you know the services which you can offer, once you know the deliverables which you have, things are in a very right perspective. So factors which have determined the change in internal audit function. Number one, there are new technological issues, including cyber threats. Cyber threats have changed the entire landscape of business. The ecosystem is now totally threatened. You have to have a new view to risk management. Yes, you have to identify the risk on a daily basis, mitigate them, and ensure that whatever new risk that comes in is properly encountered. Changing stakeholders' expectations. We historically were a management function, which even we are today, internal audit essentially the management function, but the roles and expectations of stakeholders have changed manifold. You have now increased integrated economies. Yes, very important. You have changing rules and regulations, and more importantly, natural disasters and pandemics. So these things you have to understand, and then you will be able to understand what you have to pay, what you have to perform. So this gives rise to involving new roles of an internal audit or auditors from their traditional roles. First, internal auditors advise management and the board of directors regarding how they can better execute their responsibilities. The internal auditors essentially serves as the eyes and ears of the company's senior leadership and board of directors. We are answerable and reporting to the audit committees. So largely, when you have that thought process, you are able to work in right tandem. As an internal auditor, you can add significant value to an organization by reviewing the risk management processes and ensuring that the right controls are put in place. And more importantly, the stakeholders expect the internal audit to look deeper and see further. So they have to work in the shoes of the management. What are the enhanced service offerings? Number one, you need to participate in strategic planning and development. You need to support the leadership agenda with a new focus on data/technology-based services. You have to be integrator of ERM to develop a mix of risk and compliance-based audit efforts. You need to augment new skill sets like data analyst, and you need to create an impact on value for future and initiative of proactive approach to risk identifications. So, to conclude, you have to be a total business solution provider, which our institute has been saying. Your institute, the Institute of Chartered Accountants of India, is totally emphasizing on the fact that you have to work as a total business solution provider by maintaining independence, integrity, and objectivity. And the third area of today's discussion, recent areas of, I'm sorry, I thought the third topic has started, but it's the second topic only. What are the areas where you could contribute? So one is data analyst. You can do data analytics. It's a great area and number of people are required here. Global IA frauds, prevention controls. You have to see how you can encounter cyber crimes. You have to report on sustainability and integrity and largely ethical and regulatory compliance, which is very, very important in today's complex corporate world. The third topic is the growing relevance of ERM business. What is ERM? ERM is enterprise risk management. How do you define enterprise risk management? Enterprise risk management can very aptly be defined as a method and process used by organizations to manage risks related to achievement of objectives. The board works with an objective to ensure that maximization of shareholder wealth is ensured. So risks come in many forms. They can be certain geopolitical risks, financial risks, customer risks, supply chain issues, regulatory issues, litigation issues, rising costs, and so on. So managing these risks will help to provide or achieve desired goals. Therefore, introductor should understand ERM, if not viewed as an exercise in compliance, is an opportunity to empower an organization. An organization looks for professional chartered accountant like us. So if we are able to envisage, if we are able to draw the horizon of the expectations of management, we can work in that tandem. Major activities and opportunities under the domain of ERM. What can they do? Quick win areas where the internal auditors can provide assistance. Number one, establishing and aligning leadership and governance. Very, very important. Second, you can assess compliance with internal controls, internal audit standards, and global COSO ERM standards. The global COSO ERM standards again have set up a benchmarking for us to perform. The third is integrating independent risk management activities and integrating independent internal control activities. So once you are able to work in a holistic view, you are able to add value to the entire perspective. ERM raises the profile and effectiveness of internal audit and the extent that internal audit could be involved without compromising its independence. So ladies and gentlemen, we have three very versatile speakers who will take you through the entire propositions of these topics in length. So not taking much of your time, I would simply call upon the first speaker of the day so that she can, Madam Vijay Lakshmi Suresh, she can take you across the entire thought processes and her experience which she has acquired over the years. Madam Vijay Lakshmi, the entire dais is yours. Looking forward to a scintillating session from you. Great. You can start, Madam, now.
Thank you, Nandaji. And good evening to all fellow chartered accountants, and a very warm welcome to all of you. And thank you for joining this seminar on a Friday evening. The topic on which I'm going to share my thoughts with you today is internal audit in a VUCA world. While some of you may be familiar with the term VUCA, some may be hearing it for the first time. The world-famous biologist Charles Darwin, in his famous theory in nature, it has been seen that only the most adaptable creatures survive, not the fittest creatures like the woolly mammoths or the strongest creatures like the dinosaurs that have become extinct today. How is the world today? Most of you would say it's very dynamic, it's super fast, so on and so forth. If you look at it, today this is what is happening in 1 minute on the internet. You have 1 million logging into the Facebook. You have nearly 4 million Google searches happening online. In 1 minute, people are spending $1 million in shopping. And then there are about 200,000 people tweeting, so many messages going forth, so many views, so much of music downloaded, so many movies watched. And had you seen the same chart 5 years ago, the picture would have been very, very different. You would not even have seen some of these companies. It's absolutely fascinating and mind-boggling that this is what's happening in 1 minute in today's world. There has been a paradigm shift which has happened in the last 10 years. Today's reality is the world's largest taxi company has no taxis. The world's most valuable retailer has no inventory. The largest movie house owns no cinemas. And the largest accommodation provider has not even 1 square foot of real estate. It's unbelievable. 15 years ago, we would not even have thought this would be possible, but today it is the reality. And what are the key drivers for this new reality? It is essentially technology, changing consumer preferences, easy access to global market. The whole world is the market today. You don't have to restrict anywhere geographically or to a small state or a city. And lastly, and most important, private equity firms, they have promoted innovative business models in a huge, huge way. Now the situation today is either one innovates or becomes completely irrelevant. Only 11% of the Fortune 500 companies from 1955 exist today. The 89% are not even there, and these were the world's top companies. The average time that the companies stay in the top 500 has fallen from 75 years to 15 years today. It's even predicted that 75% of the S&P 500 index, so this is the index of the leading 500 companies in the world, that will be replaced in the next 10 years. And a recent study of The Economist suggests that 90% of the jobs of accountants and auditors will be taken over by robots in the next 20 years. It has already happened in the field of law. And how the mighty have fallen. Many of the global corporations identified by management gurus and global consultants like McKinsey as great, excellent, visionary, these have fallen steeply and some have even vanished. So if you see these 4 books that I have just flashed on the screen, In Search of Excellence, so this was written about 3 decades ago by consultants of McKinsey on parameters of excellence, and they have identified companies, and none of these companies are there today. Similarly, we have a very famous management book called Built to Last, Good to Great, companies that are good and that have moved to great. And finally, the one and only Jack Welch, who led GE to its glory and excellence. Several of these companies, which were promoted as excellent companies, like Ford, General Electric, Circuit City, IBM, Wells Fargo, Fannie Mae, Bank of America, some of them have absolutely fallen to the wayside and some are not even there today. What has changed? The reason is innovation, customer focus, execution excellence, cutting edge technology, agility and adaptability. So the new age enterprises have these characteristics which the old age enterprises did not acquire along the way, and these are the differentiators in today's world. Why this dramatic change has happened in the last 2 decades? It's because we live in a VUCA world. VUCA means volatility, U for uncertainty, C stands for complexity, and A for ambiguity. VUCA is a practical code for awareness and readiness. This term was first coined in the US military. It has its origins in the US military and later on moved into strategic leadership. These 4 elements, they present the context in which organizations view their current and future state. It deals with preparedness, anticipation, evolution, and intervention. So the VUCA factors are as relevant to the military as to strategic leadership and as much relevant to the internal audit function. Volatility. It essentially means the rate of change, the nature, dynamics, and speed of change forces, and also the change catalysts. Today, change is not predictable, and this causes consistent turbulence. Some industries are somewhat predictable with seasonal fluctuations. Some are fairly stable and predictable, like FMCG companies. Some have seasonal fluctuations, but have all-round year stability. It's a challenge for them. This could be industries like tourism, retail, and even the very company where I come from, Voltas, where air conditioners is a very seasonal product and market. Third set of companies you have where it is highly disruptive environment. The ICE companies, which is information, communications, entertainment, and tech companies. These survive and either thrive or vanish in a very highly disruptive environment. There are unexpected events for unknown durations. So what was very easily understood in terms of business models, business environment, is today completely unpredictable because the rate of change is so fast. Come to think of it, can we think of some of the things that we were using very regularly 10 years back and have vanished today? Cameras, music systems, and wristwatches have almost disappeared only because of one thing, and that is the mobile phones. Television too has vanished or will vanish in the near future because the Gen Z, the Generation Z and millennials, they choose to consume entertainment through their smartphones, iPads and laptops. So television is a thing that we see today, that people over 40 years of age enjoy watching televisions, but the younger generation, it is not important. Uncertainty. The uncertainty is essentially that we are unclear about the present. So lack of predictabilities in issues and events, it makes it very difficult for us to see the future outcomes or even make sound decisions. While we have the basic information, cause and effect can be known, however, the full information is not available to us. So we are very unclear or fuzzy about what is happening around us today. And this uncertainty actually becomes an impediment in decision making or predicting the future. To give an example, you have a lot of uncertainty surrounding government policies, especially we may have seen after COVID. We have the Reserve Bank changing its policies. We have the Finance Ministry giving support to the common people. We have government policies changing. We have tax regime that is very volatile. And these impact investment decisions, merger and acquisition deals, etc. So the uncertainty, so all of us are very confident about making good decisions when we have all the information. But the truth is we will never have all the information. We will not be clear even about the present, and we yet have to make decisions which will affect the future of our firm, the future of our business, and the future of our generations. The third C of VUCA is complexity, which means that there are multiple key decision factors. There are too many variables that you can see. Some variables are interconnected, but they are very difficult to gauge the correlation between them, and this gives us a sense of bewilderment or confusion. It is like you can see the small picture of a maze. It's like a maze. You enter and you don't know where you're going. You don't know what you will hit next. There is no cause and effect chain that is there. And the pace of dynamics, it is so fast paced that it makes it very difficult to analyze and leaves no scope for the traditional root cause analysis. Before one comes to a conclusion, things change again. So things are so complex and rapidly changing that you cannot come to a clear conclusion, and there are so many moving parts. To give a small example, for a company that has supply chain organizations in multiple countries, these will have different and changing regulations on environment, labor, safety laws, etc. So, and a multinational company which has supply chain operations across the globe has to deal with this complexity, and it is ever changing. You have to keep juggling too many balls at the same time.
Ma'am, can I request you to please switch on your PPT?
It is switched on, ma'am.
Sorry for the interruption.
Just give me a moment.
It's not live. It's not coming. Yeah, sure, please.
Is it visible now?
It's there now, ma'am. Yeah, it is there. Thank you, ma'am. Thanks.
Yeah. So sorry about this. We move on. So we have a challenging and dynamically changing internal audit landscape. These are challenging times for internal audit. We have a very rapidly changing external environment. The economic environment is changing, geopolitical changes are there, social changes are happening too fast, and there are regulatory changes. Coupled with this, what we find is most chief audit executives, they expect their organizations also to change significantly with the changing external environment. There is also growing expectations from the audit committees. And in today's environment, we need enhanced skills in the area of artificial intelligence, bots, blockchain, IoT, and so many more. So we cannot fight today's battle with yesterday's weapons. So it's very important for chartered accountants and especially internal auditors to be well armed and well equipped to face this new VUCA world. Are we adaptable or are we change averse? New rules need to be written to counter new problems. One has to take risks to counter risks. A search for time-tested solutions will not take us anywhere. We also have to dynamically change internal audit's work practices, driven by change in workplace and business models. Post-COVID, this concept of hot desking, working from home or working from anywhere to be correct, that is actually going to be a new norm in future. It could also be a permanent factor in many organizations. Increasing share of online business. So many things are dynamically changing in the workplace, and internal audit also has to change and evolve very quickly to match this change. What is required for this is agility and openness to change. How is auditing going to be in the future? It's going to be more future-focused auditing. Our traditional approach has been focus on what can go wrong and how to mitigate it, how to prevent it. our focus has to shift from what can go wrong to what needs to go right. So we need to worry about what has to happen right so that we can provide assurance to our stakeholders. The traditional approach has to be matched with out-of-the-box thinking. Risk assessment will not be any longer an annual exercise. It is very much dynamic. Audit where the risk is going to be and not where the risk is already being. Testing efficacy of existing controls may not be sufficient. As auditors, we need to assess the potential control gaps in a dynamic business environment. We also need to have and to let non-conformists have their space in assessing risk. We have to be ahead of the curve in the technology function. Else, in the audit profession, we will be soon erased. The next major factor influencing internal auditors is organization culture going forward. Organization culture is the most overlooked element in audits. We audit documents, we audit data, we do analytics, we look at people, we look at processes. But the culture which is embedded in a company is completely overlooked in many audits. The organizational culture is here and now. It is in the present, whereas risk culture actually embeds how to deal with the multiple tomorrows. So risk culture is future looking and an organization's culture is present. And if there is an imbalance between the two, it can have a very significant negative impact in the way we work. What are the culture red flags that an auditor should watch out for? We need to take a hard look at the soft stuff. Are there significant deviations from the board's espoused values? Is there a silo-based functioning in the company? Do we see a layered management reporting? Is the approach of top management and senior management, is it a short-term myopic approach? Is the company following control management instead of risk management? And are there black holes within the organization of which we do not even have visibility? So culture is one area which is very, very critical. The next area that we need to watch out for in this dynamic and rapidly changing environment is cybersecurity and fraud risk. Cybersecurity. Cyber risk is an enterprise-wide risk. It is not just for the IT function alone. The World Economic Forum ranks cyber attacks in the top 10 risks among those likely to cause global crisis. It's very, very critical for auditors and the management to protect the crown jewels of the enterprise, which are the business critical applications which shall never be breached or attacked, and this has to be protected at all costs. Security. We clearly see today that internal audit needs to up its game on cybersecurity. Assessment of cyber risk and security is not taken up by internal auditors for various reasons. It could be lack of knowledge, lack of skill sets. The auditors may not have the tools to do a cybersecurity assessment. And hence we find that it is generally outsourced or it is done jointly by the internal audit team together with an external expert. Even if we do not have the expertise in this technical area, what is very critical is to enhance our awareness and keep abreast of the latest developments in cyber threats and protection measures. This has become absolutely more pronounced after COVID because the cyber attacks have multiplied post-COVID. Internal audit and fraud risks. Today's organizations are facing vulnerability to fraud risk, and this has been elevated. What is the role that internal audit can play? One, we as auditors can assess the adequacy of the organization's fraud risk management policies and processes. Can we include fraud risk in our audit scope? Yes. Can we enhance our awareness by use of data analytics? Because by today, for sure, given the size of the enterprises and the volume of transactions, it is absolutely impossible to cover the entire universe of population. And as traditional auditors, we look at sampling. While it gives a limited assurance, the entire universe cannot be covered unless we use smart data analytic tools. And in the process of data analytics, I'm sure many of us have come across eventually help us to identify pockets of fraud that have happened in the company. And this is something that I have achieved in the last couple of years. Data analytics immensely helps in fraud. And what we need to be aware and what we need to do is to empower and invest in internal audit teams, because this improves the effectiveness of fraud risk management measures. Any amount of fraud risk measures that the company takes in the IT space or in tightening processes or putting controls, that will not give the desired results unless and until internal audit also takes ownership of fraud risk and is empowered to cover fraud risk in its internal audit scope. In sum, we have to expect the unexpected. Internal auditors have to adopt a dynamic risk assessment approach and flexible auditing. We need to deploy technology in key areas like use of software for audit management, use of data analytics, automation of routine tasks, etc. We need to encourage diverse and challenging thinking. We need to train our staff to be agile thinkers rather than doers, and always stay connected to the external world. We cannot be living in our own little cocoon of safety. So we have to be aware, adapt, and achieve. So this will make sure that from one VUCA of volatility, uncertainty, complexity, and ambiguity, we move on to the other desired VUCA of vision, understanding, clarity, and agility. So as you can see the cute little cartoon, this is a VUCA facilitator, and we as internal auditors should be aware of VUCA and should facilitate it. Thank you.
Thank you, Vidya ma'am. Thanks a lot for your wonderful presentation. And now I would like Anuja ma'am to take up. I want to sum up your session like the illiterate of the 21st century will not be those who cannot read and write, but those who cannot learn or learn. So over to you, Anuja ma'am, for your session on evolving service offerings.
Sure. Thanks, Shalini. I'm just going to share my screen. Please let me know once you are able to see it. So is my screen visible?
Yes, ma'am. Yes, ma'am.
Right.
It's there.
Yeah, all right. Okay, good evening, everyone. And today the topic that I'm going to be covering is how we as SMPs can really enhance our service offerings as internal audit professionals. And I think before we actually speak about the topic, I would really like to applaud Dandaji and his team, because I think it's a great initiative that IASB has taken in the recent times, and the topics that they have put together and the speakers that they have gotten. So I think it's the need of the hour, really, that we are getting this kind of a exposure to our SMPs to really understand that what really matters in today's world. We often see that a lot of the SMPs are primarily are into the services like tax advisory, or some of us are GST practitioners, and some of us are the hardcore statutory auditors. And then there is this large world of business advisory, and somewhere we also call ourselves as internal audit practitioners. So for me, I think it's very essential that we really understand that are we into this profession, or have we picked up this line of service offering by choice, or is it that we are doing this by chance? So, I think specifically for internal auditors is such a niche area here that we are talking about, that having the passion and getting all your creative juices flowing and being a hardcore internal auditor is a different ball game altogether. So I would first like to really, congratulate each one of our SMPs who have shown this amount of interest in really understanding what the IASB has to offer and are really wanting to enhance their skill sets, enhance their service offerings to their clientele and really get into it. Because I firmly believe that I am an internal auditor by choice, and I think that belief and that understanding really takes us a long, long way in actually setting up our clients for a great success and eventually also setting up ourselves and our practices for a great success. So I think that's a very, very commendable job that the IASB is doing, and a great initiation of today's day with Vijaya Lakshmi ma'am, who is actually, she's brought up she's kind of set the context and given us so much really to ponder about what's really happening in the VUCA world. And it's essential that we as really internal auditors understand that, especially in these times of uncertainty, if we want to move from the original VUCA definition to the newly nicely defined VUCA definition which Vijaya Lakshmi has put forward, what are the things that we as practicing internal auditors really need to enhance in our service offerings, and what is the best thing that we can really bring to the table for our clients. So with that, I think let's look at what is the best that we can do to enhance our service offerings. Now, what I'm going to speak about is, and I have a very short presentation here, and we are primarily going to speak about 5 key points and I'm going to try and build that up as a story, as a understanding of how one thing leads to the other. And I think enough has really been said in so many other sessions that all of us would be attending, and even in this SMP series which the IASB board has put up for us, we all know how really the internal audit environment is evolving and how we have really moved forward from there. And I think it's very important to also understand that how our professional governing bodies, that is our own institute, ICAI, the core internal audit profession governing body, that is the IIA, and also a lot of cues that are coming up from the Companies Act, the MCA, and all these kind of professional governing bodies. What are the message that they are really trying to send to us? What are the cues that we are expected to take from this scenario, and how are we really expected to broaden our horizons to take these cues, to understand that do we really have what it takes to meet and set ourselves up, go to the next level and really make the best of this profession for ourselves as well as for the client, and as well as for the entire organization and the economy. So what is our role? How are we really going to broaden our horizons? How are we going to enhance our service offerings? And do we really have what it takes to do that? Now we will also be speaking about some of the practical examples, or the way we can really find and pave way for opportunities. I think that's a very practical challenge which most of the SMPs really face at times, and I have actually faced this myself when I was into the consulting world, that how do I really pave way for opportunities, and what are the right things that I really need to do as an internal audit practitioner or as a business advisory practitioner, and what is it that is going to take me, how can I really go beyond the conventional discussions and kind of break the ice and get into, start the conversations, get into really some good inputs from my end for the client, for his business, for his growth, as well as how is it really going to help me enhance my offerings and enhance my practice. So with that, we will also look at some practical examples of how we should align our service offerings to the existing business needs. How do we really need to keep ourselves up? And these are going to be extremely practical examples which I myself have practiced at some point of time, or I have seen practitioners really adopting to these practices, and how we can really connect the dots there. So we are going to speak on these 5 different aspects as we move along for the next 20-25 minutes. But before we really get there, I think this small clip art or this small cartoon that we really see here, that we see a management and an internal management representative or a leadership representative and a internal auditor really having this kind of a conversation where, the statement that we've been hearing is that we are expecting you to do something bold and innovative. But what we really do not want to differ from is what we have been doing for donkey's years. Now, what is interesting and what really to understand and identify, when I looked at something which the leadership or the management is telling the auditor, or is it something, and who of these is really the auditor and who of this is really the management side? Because I think when we are looking at these two aspects in silos, it is very easy for the management to really say that my internal auditor is not really coming up with a lot of innovation, and they are sticking to their traditional ways, and only being the only bloodhounds and only fault findings and those kind of things. And it's very easy for us as auditors to really say that the management is really not ready to give us an entry into some of the strategic planning activities and give us a seat at the table. So when these two extremely crucial roles in an organization really talk about it in silos, each one of them have really they have the, I would say they have the right or the authority to think that it is a need of the hour that the other person needs to change the mindset. So yes, we all agree that there is an absolute necessity to change the mindset. That is the need of the hour. But I think what I would really like to drive towards the end of this session is that some introspection into whose mindset really needs to change. Are we first of all equipped? Are we in a position to really up there, and have we upped ourselves and have we enhanced our service offerings for us to really think that the management is who is someone who is really being rigid and not getting up there? What we have been seeing through series and what we understood from some of the earlier sessions and what we have been hearing otherwise is that yes, now the internal auditors are being looked as strategic advisors and business partners, and so things are evolving. Definitely things are changing. So how that is changing, how we are really being a part of the entire evolving internal audit environment, how the things have changed. Some of us who have really been to it and wanting to explore the world have definitely seen and heard this, that when we started around 10 plus years back, we were into, or 12, 15 plus years back, I would say, we were into a traditional role of an assurance provider. We were looked upon as, standing in one corner of the boardroom and putting up our points and really feeling that, one up position when we brought about a lot of queries and questions and really put the management at a hard spot to answer those kind of questions. That was the kind of the role that the internal auditors were expected to perform at one point of time. And this I'm talking about at least 12 to 15 years back. Came along the waves of, SOX and those kind of things when a lot of things started changing, and a recession hit us in 2008-9 and those kind of times. And then when our roles were upgraded, that which is the function, who is the person who can sound the board and the management and can really help in cost savings, and what is the role of the internal auditor there. So that really happened when we moved forward in our offerings. And then in fact there were times when really the cost savings that we brought to the table quarter on quarter or annually was one of the measuring parameters or a scale of really measuring our inputs or our success and what are we bringing to the table. So that the cost savings or the those kind of things were really what really mattered at that point of time. But if we really look at how we have eventually evolved and the internal auditor of today, what are we really responsible for? When we say that we are in the role of business advisory or strategic partners, I think what we really need to now look at us first are and what kind of work that we are doing, what kind of services we are offering, are we really thinking of ourselves as contributors to value creation? Are our clients, is our organization really looking up to us to increase the top margin improvement side of it? Are we really contributing to the top line in some sense? Are we really, getting there? And when I say top line, it does not really essentially mean only talking about revenue growth and those aspects. There are a lot of other functions and teams to doing that. But like Vijayalakshmi mentioned, a hard look at the softer aspects. Today's businesses, the way they are growing, the kind of complexities that they are facing into, that really requires for a top line to grow. It is not really only restricted to revenue growth. There are so many other aspects which very, very easily get drained or get, shifted under the carpet. Things like governance, things like ethical issues and those kind of things. So that I think is where, a forward looking picture to our clients, to our organization, that kind of a role when it comes to also in some sense really has an impact on increasing the top line. So I think that is where we are today, and it's going to be interesting to see in the next few years where the journey will, really proceed, and with all the kinds of equipments that we have today, the kind of data analytics and those kind of things which the internal auditors are really adapting to. I think that it's going to be interesting to watch, and it's a very exciting time to be in this profession where we will be seeing that where all of this is really going to lead us next into. So I think, yes, we all really need to fit that into our minds, that we are no longer that person sitting, in one side of the boardroom, responsible only for the audit committee. Of course, we are responsible for the audit committee. Of course, we are responsible. We at times do have to adopt the traditional vouching approach, and we do have to ask some hard-hitting questions. Of course, we are responsible for cost savings. Of course, we are yet to see that the margins are always doing good. But we also have to have a bigger responsibility towards wealth creation or value creation for the organizations. That's what is the next point that I want to talk about, that as we said, like how the expectations from the internal audit profession have kept on shifting gears. It's very interesting to see how our professional governing bodies like our own institute, ICAI, and then the IIA, that's the Institute of Internal Auditors, and such kind of profession who lay down, pave the way for us, cues about how we should really be enhancing ourselves. Now, there are a lot of things that are happening. I have picked up only 3 very, very hard-hitting cues and very, very recent ones, which will really help us introspect as to where we are and how can we really use these guidance, and how can we, and these are not just publications. That's what I'm trying to say. These kind of things, these kind of inputs, or these kind of activities that our professional governing bodies are bringing to us. Why talk about anything else? These kind of events or these kind of web series that our own institute, our own IASB is holding for us. So all these are nothing but how they are helping us to succeed. So the 3 things that I have, have really caught my attention, and which I would definitely want each one of us to really introspect and ponder upon, are these 3 things. The first thing is the introduction, and it's as new as I think September or October 2020. The Institute of Internal Auditors of India has come up with an internal audit competency framework. Now imagine our governing body telling us that what are the kind of skill sets at an elementary level, at a medium level, and at an expert level. What are the kind of competencies that we as internal audit professionals are required and expected to imbibe in ourselves to set us up for success? What is the level of professionalism? What is the level of performance? What kind of leadership and communication aspects and what kind of leadership and communication skills are required for ourselves? So imagine having measurements really being put forth for us to assess ourselves, as well as to really put forth a team. And we all know, we also know that our own institute has revised the internal auditing standards very recently in the last couple of years, and there are really very interesting standards that have come up, and we also now have a framework and very interesting topics, industry-wise topics being touched upon. So what are all these things really telling us? We also know that bodies are helping us by carrying out multiple surveys, the reach which we as SMPs may not have today, and these kind of publications really help us understand the global perspective and the expectations of this profession. So I would urge all of you to really understand and go through it, and I think most of us must already be doing that. If not, these are the kind of things that we really, need to expand our horizons, understand and learn from. We all know, we were speaking about, Nandaji spoke about cyber security and fraud risks and, response to pandemic and these kind of things. Vijaya Lakshmi spoke about, how these skill sets are really important in the VUCA world. So I think this is nothing but what is really coming of our study of what are the risks in focus, what is the forward-looking picture, and our own governing bodies are actually taking the efforts. They are putting all these things together. They are giving us, a worldly perspective, a global perspective of what is it that really matters today from us as internal audit professionals. And last but not the least, I think the 3 lines models, which is the newer version of the 3 lines of defense as it was originally called, which got updated again sometime in 2020 itself. I think it was June or July 2020. I think that the update that has come to this 3 lines model, what our professional governing bodies are trying to tell us, is a very important message that internal auditors are not there only to protect value. They're there to enhance the value. They are there. So the new model really talks about, and we all know the 3 lines of defense, right? The performers, then comes your InfoSec and your compliance teams and all, who are the second in line of defense. And then we as internal auditors have always traditionally been viewed as a third line of defense traditionally. And this model was really going on and was being followed for several years now. And that has really broken now. We are now, though we still continue to call it 3 lines model. It is very interesting to see how the drop of the word defense has happened, because we as internal auditors are no risks or the challenge. Prospectively learn to live with the risk and prospectively manage the risks that are there. So I think our responses to the pandemic, which has hit us very recently, and the way everyone is really talking about that the pandemic is here to stay, and we are really expected to up our guard, and we are really expected to learn to live around with it. And we saw that how fantastically eventually over a period of time, the organizations have really come up with their own innovative ways of working around the problems. Yes, there is social distancing. Yes, there are certain health guards that need to be followed, and how organizations have come up with multiple ways of really ensuring employee safety and those kind of things. So what does all of that mean? That means that everyone is coming together and really working on how we can prospectively manage the risks and not really. So we as internal auditors also really cannot just sit and stay on the other side of the table and talk only about protecting the value or defending the risks that might be coming up. We have to roll up our sleeves, get our hands dirty and work along with the management. So I think these three are the ones that I have picked up here are independent of each other, but in some sense a cue or a message. It was a very rude awakening for me as well whenever I read these kind of visionary thought leadership or visionary thoughts that really our governing bodies put forth to us. And these are not really publications, or these are not really topics that come into our journals or that get uploaded on our websites for us to read and forget. No, it is for us to really evaluate ourselves and then draw the line of what is in it for me, how me as an internal audit professional, am I really responsible for, connecting what is written there to the way I function, to the way I offer services to my clients, and how can I really use these learnings, use these directions that my own governing body is telling me, my own profession is telling me, and how can I really put that forth and set my customers as well as myself for success. When we speak about that, I think the next point that definitely comes up from this is that how do we then broaden our horizons? What is it that is really required? Messaging that is coming to me, and what do I really have what it takes to be up in the level, be up in the game. So there are these 4 or 5 aspects which I am sure each one of us know, have heard, have maybe a lot of a lot of talk and discussion around what really is needed to take us there. But what I want to really, and however cliched this may sound, we should really cannot really undermine the importance of these 4 or 5 factors which have really helped most of us in upping our game and being there where we are today, the approach that we really need to bring in. The first one that we will talk about is the technical competency. Now this, of course, there is no escape to the expectation that we are all chartered accountants, we are all expected to have a certain level of technical competency amongst ourselves. But today, as internal audit professionals, or for that matter, any professional, just being a chartered accountant does not really, end. It's not really the end of the story there. In fact, it's just the beginning. So we cannot shy away. We cannot just stop at accounting and auditing standards and those kind of guidance notes and all of those, the things that really come to us. We have to up our game. We cannot shy away from the concepts of agile auditing, from the concepts of artificial intelligence, machine learning. And so I was very looking forward to seeing these different, and I've seen so many different topics being covered by in this series itself, where you will realize that what really needs to up the technical competency quotient is no longer restricted just to theoretical knowledge, and technical knowledge or technical competency is not restricted only to theory and what we have learned as chartered accountants. It is a much longer way to go from there. In fact, that's just the beginning. What is also extremely essential is that we have to be well informed and updated. And how can really, why am I saying this is very important? Because traditionally, internal auditors, the way aspect in an organization, and internal auditor is expected to, let's say it's expected to be a jack of all trades and a master of none. Now, jack of all trades is fine, but if we really want to excel, if we really want to, enhance our service offerings, we have to choose a line. We have to specialize. We have to really keep that forward-looking view, and we have to choose. It could be anything. Even as internal auditors, it could be a horizontal or a vertical that I will as a SMP decide to up my practice. It could be that I would specialize in automobile industry. I could specialize in IT industry, or it could be anything. So these are the kind of specializations that is really the call for the day today. Why do we say that? Because the kind of conversations that you hold with your existing as well as your potential clients, you essentially have to stay on top of the game. You are essentially expected to understand how the socio-political and geographical and all those kind of economic developments that really impact the industry, it's no longer only enough to have a sound understanding of your client's business. It's also essential today to have a very, very sound understanding of the client, of the industry that the client operates in. You are expected to become that go-to advisor. you are expected to make that impact. And it's sad that traditionally we once we qualify as chartered accountants and once we get into practice, quite a few of us really struggle in really breaking the ice, going and talking to the clients. And it's often said about our profession that there are times when we really lack some kind of influential ability that is really required. We are more of those bookworms and those kind of things when we initially get into move ahead in our life after passing the exam. So that is something which all these things are not really going to come to us. We have to essentialize. You may be serving a multiple industries today, but you have to know that what is it? How do I want to up my game? How do I want to really become that go-to advisor? And what is the specialization that I really want to do? It's good to be a jack of all trades. It's required to be a jack of all trades, but it is absolutely essential to master, to choose your line of mastery, so that, the management or the leadership or your clients really know that you are the person who has a sound understanding of the industry. You know that even if there is a small movement here and there on any aspect, anything that's really happening in the industry of your specialization, of your choice, my internal audit advisor or my internal auditor is going to be able to tell that to me. I'm going to be able to hold a good conversation with the internal auditor. So those kind of that spark, that go-to ability, that specialization is absolutely essential. As I said, however cliched it may sound, that Rome was not built in a day, but trust me, movement by movement, we all may not be able to define and identify that what service offering do I really want to specialize in today, but eventually I want all of us to really keep that at the back of our mind. That's really going to help us, and that's really going to up our game eventually. How do we really break the ice? How do we really go beyond the conventional discussions? How do we really pave way for opportunities? And what are the things that we really need to get right? What are the things that we need to do right in order to break the ice and get entry and get, set up our client for success, and in turn, obviously, up our game and really set ourselves up for success. So I really like to always think about, whenever we approach any kind of audit assignments or any kind of potential clients, these are the 4 R's or the 4 rights that we essentially need to, if we concentrate on these, I think it's in some sense a sure recipe for success. Of course, it comes through practice naturally, but this is something which is a sure recipe for success. It has worked for me, it has worked for my peers, and it has worked for a lot of people I know. So let's talk about what are those 4 rights or what are those 4 R's. The first and foremost being that, ask the right questions. But when we do that, we essentially have to do our homework first. This is where the specialization will come in. Whenever we are speaking to our clients or our potential clients, we all know that, typically when we go and enter any such kind of conversations, there is always this breaking the ice kind of a scenario, and you are really judged, or judged may not be the right word here. You are really, your potential client or your existing client will know that what he or she has in it. I mean, what is it that you are going to offer him in those initial 5-10 minutes of the conversations that really happen. So we all know that how do we really break the ice? We really break the ice by talking about, a lot of things that are happening around the world, a lot of things that are really impacting the world around us. And in that, it is not always enough to really talk about your offerings only or what you have to offer. Of course, we will sell what we have to offer, but asking the right questions to understand the pain points of the management are really important. Doing a lot of things like small homework of the industry, or, that, as I said, is not going to happen overnight. It's going to happen over a period of time. Knowing the business, understanding who are the key people who are going to make the decisions. You have to meet the right people. Typically what happens is that while the audit may end up being of any different area that we have, we really, end up a lot of times really end up having these kind of informal gestures or informal conversations, or our only source of information, any kind of informal information is restricted to the function that has probably hired us to really get into this kind of audit engagement. More often than not, we are either a part of, either a supplementary or complementary to the existing in-house or we would be working with the CFO office to get some kind of audits done. Now, it is not enough to really stick to only the function with whom we are interacting, because issues, as we are seeing, where we are going, where the world is going, where our profession is going, issues often lie beyond the numbers. So it is very, very essential to meet the right people. For example, if I were to speak about my own industry, the ITES world, the internal audit for any of your internal audit assignments with your ITES clients, it is not essential that you speak only to the head of finance or only to the head of HR. You also have to look at what are your service offerings when you're really talking about talent management or resource management. You also have to understand that having the right things in place. What are the biggest assets for ITES companies? It's their people. So the major cost lies actually in the ERE, or the employee related expenses, as we call it. So it is extremely essential that how the resource management is really happening in these organizations. So it is extremely crucial that you meet up with the right people. You meet with the resource management head in these kind of scenarios. How do we really do that? That will also go back to asking the right questions, that who are the right people, who are the decision makers, those kind of aspects. Bring up the right issues with the right people. Now, all these things, all these 4 rights, if you see, they are so hand in hand with each other. You cannot talk about, essentially about the challenges in resource management to somebody from a sales or marketing team or somebody, you have to ensure that you're talking about the right issues with the right people. So know where to hit the hammer, and it is also extremely important to hit the hammer when it is hot. I mean, you have to grab the right timing. As we are all seeing that today we are in pandemic times, we are, a lot of our organizations, lot of our clients are so open to so many vulnerabilities, so many threats. So you should be able to connect the dots really. We should be able to connect the trending vulnerabilities, and we should equip ourselves and sell our services about how we can really help our organizations prepare to these kind of vulnerabilities. So these are the 4 rights. I mean, these are the kind of things, how one opportunity really leads into the other. I mean, we cannot keep on doing our audits or our audit assignments in silos. We have to keep our eyes, ears open. We have to understand that how one input in a particular audit may or may not be a part of the scope of the existing audit can really pave way for the right opportunity. And trust me, this actually happens at a very, very practical level. It is just that how we up our emotional quotient, how we up our professional quotient, and that is how we can really connect these dots. And once we get these 4 R's right, the kind of service offerings are it's a whole world out there as to what all different requirements our managements and our organizations really have. And once we get all these 4 R's right, it's a sure recipe for success. Now we will talk about some of the practical examples, of what kind of services can we really offer and how can we really link them. Now I have actually, for ease of discussion, what I have done is I have put these in 2 different aspects. The first aspect is how the external or social, economic, political triggers, how sensitive we should really be towards and how alert we should really be of these external, social, economic and political triggers to really sell our services, up our service offerings to our clients. And I have taken a few examples here. Now, immigration and visa compliance and potential global expansion opportunities. some of us might already be working on some of these aspects or some of these service offerings with our clients. But with what is happening today, what was happening, or what I would say, what was happening until now in the United States of America, where everyone was really worried at the time of elections, even now for that matter, about how the Trump administration is really going to handle the H1 visa issues, and a lot of things were at stake really when all these things were happening. So these how much does it really take for us to pick up the phone and speak to our clients from the ITES industry and really talk about what could be the potential threats, and what is it that we can really offer as internal auditors, and what safeguards does an organization really have to put in place to ensure that they do not really meet with any kind of non-compliances on the visa and immigration front. These kind of cues or triggers really help us, opens a way for us to really up our service offerings. Also at the same time, if we do not really restrict there and we really talk to our clients about if these are the challenges that we are facing or organizations are facing because of the US market, what are the potential global expansion opportunities that we have? How about tapping the Europe market? How about really tapping the Canadas and the Mexicos of the world? So for that, we ourselves have to know that what are the available options. So once we up our professional quotient, once we up our specialization and understanding of the industry and business, these kind of things actually start coming very natural to us, and these kind of conversations and potential assignments, pipeline assignments really start paving way for themselves. The next one I would want to talk about is employee safety at workplace. Now this until some time back was really a given. When actually what triggered this was when an incident got reported in Pune, the city where I come from. A large IT industry reported some fatality in their office facility, and it kind of shook the corporate world, and how and questions started coming up about how safe our employees are at workplace, and what are the kind of safety measures that organizations have really inbuilt. And I remember being cluttered with several consultants knocking our doors and saying that we will give you these kind of services, assessment of how employee safety should really be monitored at workplace. Now that is actually being an opportunist and making the most of what's really in the news, and what can really be the vulnerability, and what can really be the triggers in which large corporates, or even for that matter businesses of any size, are really interested in. The next is about the employee grievance handling mechanism. This kind of a service offering, what is the trigger for an employee grievance handling mechanism? We all know that the Me Too movement really, shook the world. I mean, shook the corporates across the world. So that was the time when there was an opportunity to really talk to our clients, or even open doors for potential clients by upping our quotient and, really being able to speak a lot about what are the existing employee grievance handling mechanisms in the organization. Do you have a ICC? Do you have a committee that is there to take care of these? Do you have a POSH committee? What are the different kinds of things that are really required? So these and corporates really do not want to take any chances in such scenarios. They are really looking for this kind of help, this kind of aid that really comes from the consultants, and the management is so busy in the top line growth, and so these kind of aspects are really left to consultants and internal auditors to really take care of, and these actually sell very well. These are the kind of service offerings where we as internal auditors have to make it on ourselves that these finer aspects or these softer aspects are not really left by, and what is the importance of these aspects in setting up our client's business for success. The next one, the next opportunity that has come up in the recent past is about treasury operations. Now, treasury operations, irrespective of the nature of industry, irrespective of the size of treasury of our clients, once the ILFS scam hit the world, everyone was really thinking about what kind of, credit ratings are happening, where are my treasury investments that have happened, and what is really happening in the NBFCs. And each and every corporate was just as we see these kind of things coming in, before it really gets too late, before it really, affects our client business. I mean, a postmortem of anything is something which we have been doing traditionally. Today, we are expected to stay on top of the game and really, keep our alerts. I mean, me as a internal auditor of a listed company also was asked these kind of questions as to, how have we upped our game and how did we not realize and understand as to what was coming. So these are the kind of things where we are expected to stay on top of the game really. And of course, last but not the least in the external or social trigger is the pandemic, which has hit us really hard, and some extremely innovative ways and means of offering our services. When lot of organizations, I mean almost all the organizations are working on defining their new normal. They are looking at how well they are prepared for remote working. We all know that organizations like TCS, who are really the large giants in the IT sector, they have really come up with extremely revolutionary thought process of having 25% of their workforce working permanently from home from 2025. Now, these are extremely revolutionary statements, and and a lot of the followers of such large conglomerates are actually then wanting to see that what is it in their organization that they can really replicate or even think of. So, we as internal auditors in our role as business advisors are at such times are really expected to put that foot forward and say that how can we really help? How can we help what is the role that we can play in defining the post-pandemic working conditions of our organization? How prepared we are for the remote working, data privacy, data security, all these kind of things suddenly spur up, and the kind of cyber attacks that we saw, the kind of unemployment that really happened. So all these are the kind of triggers, the discussions that our management and with our clients outside the regular audit reviews and all of that, themselves future ready, keep themselves really updated, and what is it that the guards that we as internal auditors can bring to the table. Looking at some of the internal or regulatory triggers that really open a different line of service offerings for us. Something like, how effective is the whistleblower program? Now, having these kind of conversations with our clients or with our management, explaining how the new CARO is going to require the statutory auditors to report on the effectiveness of a whistleblower program. Now, statutory auditors will report this towards the end of the year, but to prepare ourselves for that, we as internal auditors can definitely assess the effectiveness of the whistleblower program, help the management really make the amends wherever they are required, have an effective whistleblower program so that the organization is set up for success, so that the organization is effectively able to answer the questions that come up from the statutory auditors. We all have heard about the new Social Security Code and the Labor Code that is really going to, hit all the organizations effective April 2021. So it is a time to really assess and reassess the India payroll and the employee benefits of most of our clients. They are going to need a lot of help with their pay structure. They are going to really need reassess and relook as to how the actuarial valuations are happening, how the employee benefits are really going to be calculated. So these kind of proactive discussions are something we see a lot of, practitioners really sending out very regular updates on what is changing in the regulatory environment and, all those kind of things and industry specific regulatory updates and all of that. I think what's going to be more as professionals and practitioners can help our clients really, make them future ready, keep them prepared for what's going to come next. a lot of other inward looking activities. As I said, in the pandemic world, we understand that what has really happened is a lot of organizations, a lot of companies, a lot of businesses have shut down. There are major takeovers that are happening, a lot of mergers and acquisitions once again into the IT industry, definitely in a lot of other industries as well. That has become really the environment is charged with a lot of M&A deals. We pick up a newspaper every day, and we see a lot of news about different mergers and acquisitions that are happening. So we as a big client, or we for our big clients and corporates, or we for small companies who are prone to become a party to the merger and acquisition, we definitely can up our guard by carrying out a lot of due diligence, keeping the preparedness for any potential M&A possibility. We can in fact also actually go ahead and have these kind of conversations where we actually ask that what is it that, are we really even thinking of going into any kind of M&A deals? What are the possible options that may actually lie for our clients, and how can we benefit into this how can our clients really benefit into this entire series of events that is hitting the industry? The moment we speak about being taken over or or any kind of merger, what is really happening is today the contract compliance management, or the newer contracts that the organizations are signing, or the contracts or contract obligations of the customers of a merged entity. So it is extremely essential to understand the implications of the contract compliance management. A lot of times, in the heat of really signing up deals and in the heat of really increasing the top line, a lot of contracts get signed without really going into the nitty-gritties of what are the compliance requirements and essentials of what we really need to abide by. What is it that we are agreeing with our what is it that our clients are agreeing with their customers, and a lot of this really falls into the data security and information security kind of aspects, especially in the remote working scenarios. The customers of our clients are really being very accommodating and allowing a lot of remote working and those kind of activities, especially in the IT sector. But it's not coming without a cost. The kind of stringent controls, or the kind of stringent compliances, the kind of penalties that are being put up, the newer contracts that are being drawn up are actually really very, very important to understand the implications of that. Make our clients conversant with how important it is to carry out a risk assessment of what we are getting into and how to safeguard ourselves against the non-compliances. These are all different kinds of opportunities, which will help us open the way of discussion with our clients and potential clients. The next thing which we often see as practitioners is there are seasonal regulatory department audits. There is at times a wave of GST audits that will happen. You will see a particular geography, a particular state, or a particular industry where the PF authorities would go and start, take up one key point and start sending out show cause notices to corporates in that particular industry. So these are some of the trends that we see. So it is extremely essential that we keep a track or a tab on what are these seasonal regulatory department show cause notices and checks that our client really needs to be prepared for, so that we can averse or divert any kind of potential penalties or any kind of impacts that our clients may have to face because of staying off guard. And there are last couple of other things that I would definitely want to talk about. That these are also absolutely softer aspects of the internal triggers. If it's a promoter-driven client, or if it's some of the KMPs or the key management personnel, or even for that matter, people at any level within the organization, really we are all so prone to, and especially in these remote working scenarios, we are all so prone to using social media, and we are all on Facebook and Insta and all those kind of things, so many of us really delivering lectures and delivering talks and attending so many webinars and seminars, sharing our thoughts about the best practices that are happening back in our own industry, in our own organization, and any and every kind of social media exposure that is really our clients are really prone to or exposed to. Are we ensuring that we are not compromising on any kind of confidentiality or any kind of sensitive information being leaked? I'm sure all of us must have heard about the issue with how the financials really got leaked on WhatsApp and such kind of things. So that is one of the external trigger. Maybe we can consider that as an external trigger, that at that point of time, it is essential to bring out the right timing, right people, right question, which we spoke about some time back, and how we can really help our clients, guard the boundaries by carrying out these kind of assignments, and we helping them, setting them up for success and guarding them on all these aspects. And last, which is my favorite actually, which is it's more like a all-time hukum ka ekka, as we may call it. It's something which is always there, and that's what are the different kind of EPS improvement initiatives that we as internal auditors can offer to our management. This will happen when we know the business thoroughly well. This will happen when we know what are the vulnerabilities, what are the strengths and weaknesses of our organization, our client's organization. And this is something which has to be a continuous dialogue with the management on the EPS improvement initiatives. And this is a very, very powerful statement by Zig Ziglar, and that's something which all of us should definitely imbibe in ourselves, that success, we are all setting up for success, but the success will occur only when we are well prepared to grab the opportunity that comes in front of us. So all these were very practical examples that I wanted to share with the audience, and these are a very handful actually. This is only to tick the clock, and this is only to tick our thinking as to various industries that we work in, various client base that we really touch upon, and the specializations that we plan to do or that we already have, and how we can make the best of how some of these have actually been done by me, myself and my peers, as I said, and some of the extremely successful consultants that I know, and how really hitting the iron while it's hot, striking the iron while it's hot, have helped them align their service offerings with the business needs. So these were some of the practical examples. And coming to the key takeaways. So basically we spoke a lot about a lot of different things. Really we spoke about what is the most important way to really enhance our service offering. Is the first thing is to introspect and analyze. We should know what are our strengths. We should know what does it really take to stay in the game. Then it is the journey of our profession. It is the journey, the way we have evolved. We assured first, then we advised. Today we are expected to anticipate. We are expected to keep our clients ready for whatever are the future challenges that our organizations are going to face, that our clients are going to face. We as internal auditors will really be able to set up our clients for success only if we are able to anticipate. Now, for doing that, what do we need to do? We really need to specialize. We should really know what is our client's business. I mean, most of us already know that. It is essential to know what is the industry, what is the external triggers that are going to really impact our client's business, and have an open and continuous dialogue with our clients. We have to stay on top of the game. We have to stay proactive. We are expected to up ourselves in the game to the extent that we become the go-to advisors of our clients. And this is not going to happen overnight. It requires a lot of, we have to really have all our creative juices flowing, and we have to understand that there has to be, at the end of the day, a extremely positive intent to set up our clients' businesses for success, and our success will only align if we are convincing our clients that we are here to be their partners in their success. So these, I think, are the most important key takeaways which are actually going to help us offerings. That's it from me. Thank you so much. And happy to answer the questions. I think it's towards the end of the session after Neeraj's session. So definitely would be happy to answer any questions that any of you may have.
Yes, ma'am.
Thank you.
I'm extremely thankful to you for explaining and offering. You have given around 14-15 offerings, enhancing offerings which an internal audit can see. Very, very illustrative, very, very nice. I thoroughly enjoyed all your presentation.
Absolutely, Shalini. I think it is very important that, and these were only a handful actually. What is actually important is that this sticks and puts the triggers in the mind of our SMPs, that how they can really make the best of the vulnerabilities and the triggers that they see in their day-to-day life, and that really use and work on that trigger to create opportunities for themselves in their own ways. So that, I think, was the lesson that I was trying to drive through this session.
Yeah, ma'am. You have already recapitulated what you have taken us through. But I would like to quote Anand Munshi ji for introspection. Good people take right decisions, but great people make decisions right. So I'm looking forward for another interesting and very learning experience from our next and very experienced faculty, C. Neeraj Masoorji. Sir, over to you.
Thank you. Thank you very much. Firstly, good evening, friends. And I am privileged and I am quite happy to be here with you, all of you today. And listening to the previous two speakers, Vijaya Lakshmi and Anuja, fantastic insights which they have brought on the table. But before I get started, I would like to thank ICAI. I would like to thank IASB and Nandaji for giving me this opportunity to share some of my perspectives and my learnings and my experience on the subjects that I'm going to talk about. So I'll just share my screen and kindly tell me whether it is properly visible. Just a second. Yeah, is my screen and the presentation visible? Shalini, can you please confirm?
Yes, sir. Yes, sir. It's there. Yeah.
All right, great. And is my voice clear and audible properly?
Yes, sir. Clearly.
All right. Thank you. Thank you very much. All right. So very interesting to hear the last two speakers, and specifically Anuja's talk on when she listed out areas of potential practice. Quite relevant and quite interesting to hear some of those perspectives, and I'll probably come back to some of those thoughts which she had expressed. But first, why this topic of enterprise risk management in the context of this current and the discussion we are having today with all the fellow practitioners, chartered accountant friends? The reason I thought this topic might be of relevance, because obviously we are currently living through some tremendously uncertain times, number one. Number two, for a practitioner, for a chartered accountant practitioner, there are immense opportunities which in the context of risk management arise from the point of view of how their practice can evolve, how they grow, give value to the clients which they would serve, or which all of you would serve. So I will try and connect. I will try and connect the dots for all of you through this talk today, and of course, then through the Q&A we can discuss this further. So before I get started on the main concept, these are the three main buckets I will try and cover the entire talk today. So firstly, I'll try and explain to you, the risk as a concept. A little bit of a concept discussion is needed, and how it's becoming more and more relevant. So the extent of relevance, how it is growing leaps and bounds exponentially, especially over the last few years and the last few months, more in particular. A little bit about the process, and the third part is where probably we'll spend a little bit of time, that how does this connect with internal audit, and what kind of practice opportunities does this entire subject of enterprise risk management throw up for the chartered accountants. So we'll cover that. All right, so the definition of risk management. So firstly, when we all make our plans, this is how we plan our life. This is how we plan our goals and objectives. So, in our minds, we have a beautiful picture of a nice, clean, straight road lined up with lush green trees. And we like to believe and we like to understand that, this is how our lives will go. And this is how we will be able to, everything will be smooth. Everything will be absolutely straight. But in reality, this is what the universe has in store for us. And typically, you see these pictures, there are obstacles, there are difficulties, there are uncertainties, and objectives do get impacted by the effect of risk. So, and this is a reality, whether in our personal life, whether in our professional space, risk management and the risk, impact of risk and management of those risks is a reality. All of us do it, all of us really practice it in our own ways. But it's certainly a reality for all of us. So that's a pictorial definition of risk for you. But let me also give you a little bit more conceptual definition here. Now, this is based on the COSO framework. COSO's 2017 updated framework, which was released 3 years ago, defines enterprise risk management as the possibility that the events will occur and affect the achievement of strategy and business objectives. Now, I won't read through each and every line there. It's quite, it's available for you to read. But a couple of points I would like to highlight when it comes to this definition. We tend to use these two words interchangeably, but there is a difference. Now, enterprise risk management, as you can see from this definition, encompasses the entire approach an organization takes around risk management to ensure that strategy development and performance achievement, which is the business objectives around which the business objectives are aligned, is ensured. So enterprise risk management deals with not just an isolated risk category or a risk event. It is a very wide subject which encompasses strategy development, strategy identification, and enabling the business to achieve the right performance and through that achieve their business objectives. Risk management per se is relatable with one particular element or a category. For example, insurance is a risk management subject, but then insurance falls within a wider enterprise risk management canvas. So the first point I want to make is enterprise risk management is a wider terminology or a term, and is much broader. And usually we tend to just see that, okay, risk management is something that is sufficient, whereas when you're looking at a company or a business or an entity, it's enterprise risk management. Now, it was quite interesting to hear Anuja talk about in her last few slides when she was listing out the potential practice areas, and I was making few notes. Actually, a lot of what she has covered as some really good practice areas, if you just think it through, just introspect, most of those areas have a risk management connection, and I'll illustrate to you how. So, for example, she talked about employee safety and work conditions, especially after this pandemic. This is arising straight from the employee health and safety risk which a company or a business should manage. Then she talked about treasury operations, which is nothing but liquidity and financing risk. She talked about whistleblower, which is around governance risk. She talked about payroll and employee benefits, which is probably around the new labor code, which is around the compliance risk. Then she elaborated around contract and compliance management. This is commercial risk, this is financial risk. And then she also talked about social media exposure, which is, in a manner of speaking, managing the brand and reputational risk. So if you apply your thoughts a little differently, risk management, if we start learning the intricacies and the nuts and bolts, will in a way help us or help whoever are fellows in practice identify many new practice areas, because end of the day, when we learn how to identify and manage risks at an enterprise level, we are helping our clients become successful and helping them achieve their objectives. So that's the theme of risk management. So now in our current the world that we are living with, there is this corona event. It goes beyond even risk management. It's a black swan event. But then it is a major risk that has unfolded on across the world, across the globe, across business sectors, and across all entities, be they for profits, be they for not for profits. So there are tremendous importance of and the need for managing risks has suddenly become very relevant for almost everyone, all businesses. And if you now just introspect and just also reflect, what you will find, companies, businesses which have been faster to come back to normality, and whose business operations have revived rather or relatively faster, are or will be mostly businesses who have been good and very pragmatic at managing enterprise level risks, because those are the businesses now. So, for example, insurance companies who insured, or banks who ensured that the entire financial services were provided uninterrupted during the lockdown and even after that, have been working on data security risks, have been working on their the entire cyber security risks, have been working on the entire infrastructure risks. And as a consequence, they were prepared. They were ready. They probably even from day one, maybe March 23rd or March 22nd, the first day of lockdown, their operations were not disrupted. So the ability to manage risks and, most importantly, business continuity has enabled businesses to either come back on track quickly, or has been a guiding force in enabling businesses to come out of this entire challenging disruption. And equally, the contrasting examples, when you see, there will be, of course, businesses who are structurally impacted. Now, for example, I'll give you one more example in a while, but there are sectors where clearly the impact of this pandemic has been quite profound. But even those businesses, if they have focused in the past on managing risks, they would have certain backup options which they can trigger off in the interim and use that to stay afloat. So enterprise risk management, a broader term, a wider term, and it actually goes across the entire business activities. And when you start going deeper into it, you can definitely identify a lot many more practice areas, as I just talked about. Right. Okay. Now, talking about the role of effective enterprise risk management in business now, I talked about how strategically enterprise risk management enables businesses to get guided to achieve their objectives in all times, whether it is normal times, whether these are challenging times. The second bullet here is very important. A very well laid out, effective ERM framework enhances enterprise resilience. Now, what do we mean by this? And the reason I'm reflecting on this bullet a little bit more than others is again to illustrate the point to all of you. Now consider this pandemic situation, and the worst hit businesses were airlines initially and even after that, because their business came to a complete stop. Obviously, if there's a lockdown or there was a lockdown, even after the lockdown, airlines are yet to restore to the full extent possible. Now, resilient airlines, and there is one particular airline which I will quote, it's a publicly listed company, Indigo. Now, if you watch Indigo's balance sheet carefully, they have always maintained a cash liquidity on their balance sheet worth some 18,000 crore rupees. And I was in a professional networking session with one of their directors a few months ago, and he said that look, the reason, and this is before, much before the COVID outbreak. So he said that look, we are retaining this 18,000 crore of liquidity because we want to make sure that at least for 6 to 8 months, even if business becomes zero, we are able to survive, because an airline has bills to pay, airline has aircraft lease rentals to pay, it has employees, and there are fixed costs which they cannot avoid whether or not they fly their aircraft. And lo and behold, in this last 6 months, I guess their strategy of managing liquidity risk has actually paid off very well. So cash, since they have had cash, they have been able to resiliently manage this phase. Now, of course, they have suffered losses as other airlines have, but then it's not been an existential crisis for them. Whereas there are other airlines who we know some of the names in the past who have not demonstrated such a resilience even in normal times. So if once you start following the ERM framework, the resilience of a business to bounce back or to manage good times or to just make sure that things stay on track, stay on course, becomes much better. Now, of course, increasing positive outcomes and advantages while reducing negative surprises. It's very, very important for any business when you're drawing up the strategy. You want to avoid any negative surprises. So, and if risk management is robust, then obviously negative surprises get reduced. So the example I'll give here on this particular bullet is managing currency risk. A lot of businesses are exposed to forex. They are either importers or they're exporters or they're both. And the currency volatility, and especially INR, can be a major can throw up major surprises, because none of us has the ability to control or influence or manage or forecast with certainty how the INR will behave. There are so many factors, internal, external, global economy, Indian economy, which can impact. Whereas if the currency risk management or currency management follows a risk-based approach, then you can be relatively, and it won't be very like that. Performance variability is again a similar, follows a similar thought process. Managements and companies and businesses plan for resources assuming a certain degree of variations in their forecasts and plans. If the variations in the actual performance as compared to plans goes beyond a certain tolerance level, then obviously you got to either organize for resources or change your plans. So for example, if a business grows much more rapidly than what is planned, now while it may appear as a positive, it is a positive, but from a risk management point of view, if a business outgrows its own plans significantly, then there is a risk of not being able to service the customer. There's a risk of not being able to meet the promises or even be able to garner resources, financial ability to even support that kind of growth. So those are risks embedded in performance variability. So those are avoidable. So risk management allows you to play within a certain band and in a guided manner. It's not about not having outcome which is not fully unknown. increasing the range of opportunities. Now, this is a very interesting thought. Normally, enterprise risk management is believed to, it has a degree of negative connotation, just like internal audit may also have that. Look, the role of a risk manager is to prevent management from moving ahead. It is about avoidance, more about avoidance than acceptance. That's a perception. That's a perception, and that's probably an experience which people would have had, but that's not a reality. A good and a robust enterprise risk management is equally about identifying opportunities in order to support the business to grow. And let me give you an example here of a company which has actually demonstrated this very, very effectively. Now, this is an NBFC, again a publicly listed company, Bajaj Finance. So what is their business? They are in the business of buying. Now they over the last so many years they have got so good at identifying who is a creditworthy consumer, who is a less creditworthy consumer, who they can say yes, who they should say no, and they've learned how to play within a certain band of let's say their credit risk profile or the potential NPAs that they are willing to absorb as their appetite. Now, once as a company you learn to manage the risks well, you can, and the company can actually convert that into an opportunity, because then you can start scaling up. Same thing is true for well-managed banks, because banks also learn, when they learn how to manage a credit risk effectively, they can convert it into an opportunity. Similarly, insurance companies. So there can be immense opportunities for your clients to actually grow their businesses when they learn how to manage the risk effectively and convert that into an opportunity. And of course, improving resource deployment is one more benefit, is a very explicit benefit that arises when risk management is followed. Very quickly, I'll talk about the risk categories. I won't spend too much time. These are again concepts. So broadly, risks are classified, and there's no hard and fast rule of which risks needs to be put where. Strategic, operational, compliance, financial. It is for the ease of risk identification. It is for the ease of grouping the risk mitigation initiatives. But it is good to have certain buckets, so that a discussion or an oversight or a review or a monitoring or a communication plan can become better structured around some of these categories. And when you see some of these areas, these are very commonsensical. So for example, operational risks will cover any and everything to do with routine operating performance, supply chain, financial management, even financial reporting itself as a risk, and so on. And strategic risks, starting with the company's strategy, reputational risk, there could be cyber threats as presenting us. And again here, since we're talking strategic risk, it just occurred to me, we've been reading in the last few days these news items about, how the lack of sufficient resilience in the IT infrastructure has caused RBI to ask a bank to just hold on, just stop their fresh customer acquisitions, and they want them to. But this is on the one side, of course, exposing an element of risk, which is an operating risk, but at the same time, it is also exposing the bank to reputational risk, and the consequences will need to be very quickly managed to come back on track. So that's the role risk management can play in ensuring that some of these unknowns and some of these unforeseen events are managed effectively. So what is the process? What is the process that ought to be followed? So again, since we don't have too much time, I'll walk you through some of the key elements. So there are these 5 elements. These are again in line with COSO's 2017 framework. A well calibrated risk management process starts with risk identification. and across the categories that I talked about in the last slide. That's the very fundamental element. Unless the risks are identified, unless the possible uncertainties are also identified, not much can be done. So risk identification, and there are tools for risk identification which I will not cover today on this talk, but it has a certain structure to it. Once the risks have been identified, then the next very critical element is analyzing the risks for their impact on it. Impact can be on strategy, impact can be on performance, relating to either revenue, profitability, or quality, and so on and so forth. So what is the risk impact? What is the risk severity? How severe is the risk at an inherent level likely to be? And how is the risk likely to behave and impact the achievement of the organizational goals and objectives? So that analysis is a very fundamental step that helps to move on to the next step in this process, which is evaluating whether the risk needs to be treated, or how the risk treatment will eventually work out, which is actually the next step. But then the important step in analyzing and evaluating is also to work out the mitigation actions or the mitigation plans, which will enable the entire residual risk to be measured against the organizational risk appetite. Because eventually, how much risk an organization is capable of taking and how much risk an organization is willing to take. The willingness to take risk is about the risk appetite. So how much risk is the organization willing to take will determine, based on the risk analysis and risk evaluation, what kind of risk mitigation actions are required. And then there's something called key risk indicators. And so for risk management to be effective, it's very important to identify and define key risk indicators. So I'll give you an example. So let's say an organization is dealing with employee attrition risk. An IT company or a BPO or any organization which is people intensive will have this as a key risk, the risk of attrition or risk of abnormal attrition. Now for that, the key risk indicator very naturally will be the attrition trends. So the data-driven analysis will tell that whether the attrition levels are within the acceptable appetite or whether it is not, and equally whether the impact of the mitigation measures is showing up through the key risk indicators or is it not showing up. So a very critical element of risk management is to be able to quantify the impact of risks at quantify the impact of risks at a residual level using KRIs or key risk indicators. Once this is done, then of course we get to risk treatment, which I'll talk slightly in detail in the next slide as well, because what to do with the risks once you've identified, okay, there's a risk, certain risks to be dealt with, you got to do something with it, right? So we'll talk about that. There are various buckets in which you can deal with risks. And last element is to monitor and review and communicate back, how the entire organization is gearing up, how the entire enterprise is getting calibrated, aligned with the entire risk framework. So this is actually closing the loop. Whatever approach of risk identification, risk analysis, evaluation, treatment is put into action, there's a deployment of this approach. A robust risk management framework, by its very nature, needs the entire monitoring of and the review of the impactfulness to be done. So the learnings have to be drawn. So it's a very continuous exercise. So you continue to learn whether, because what may happen that despite the best intention, despite the best attempts, best efforts, it is still possible that some of the risks may get left out from being identified, because it's a journey. It's not like you get it right the first time. So by reviewing and monitoring, you continue to identify risks which got left out, or risks which were identified but were not mitigated sufficiently or effectively, And you come back, you go back to the drawing board, you again look at the risk, you analyze that risk, okay, what went wrong, what could have been done differently. And I'm sure a lot of companies after this COVID event, we get back on the drawing board and relook at the risk identification and analysis of what were the learnings, what could we have done differently, how could we have ensured that the organization became more resilient. So that's all part of monitoring and review. And it's kind of a PDCA, plan, do, check, act. Kind of a cycle which you continue to follow, and you integrate those learnings very effectively with this entire approach. So that's in very brief the process, the method behind this framework, which enables a very robust risk management to work. Now, you remember I talked about risk treatment. So this is one area I would like to slightly go into depth. Now, there are traditionally, when we all started learning and reading about risk management, traditionally you would have read about the 4 T's, or these accept, avoid, reduce, or share, rate, or so there are different ways of describing it. So accept, what do you accept? You accept a risk where the occurrence may be infrequent and the impact may be nominal, marginal, or not so material on the revenues or profits. So basically there could be very small, let's say a company has say 5,000, 10,000, 15,000 employees, and you have people claiming conveyance. I'm taking a very simple example. Obviously there is a risk that some employees may claim let's say accidentally or otherwise conveyance which is outside the policy, internal company's policy. Now it is possible some of them may do it accidentally, it is possible some of them may do it. Now you may have some controls which are inbuilt, but whether this is a risk which needs some heavy duty risk management, probably no, because occurrence may be very infrequent and the impact of collective events like these may be very, very nominal, marginal, and you don't need to really bother about this. While you will have some controls, but then you won't bother too much about. So you just accept and move on that, okay, fine, this is a risk we will live with. The second category is avoid. Now, you may have certain situations where the severity of the impact may be very high, beyond the organization's ability to absorb, and the frequency or the occurrences may also be reasonably frequent. Now, I'll give you an example of from my one of the earlier organizations. Now, health insurance is typically exposed to fraud risk because you are dealing with health insurance claims, which may be genuine, which may not be genuine, and that's a worldwide phenomenon. The fraud risk is a very common occurrence as far as health insurance is concerned. But when we looked at when we started looking at certain claims where there was a trend of claims arising from a certain city of reasonably high occurrence, very frequent regularity, and high. Some of them were high ticket as well. And then when investigations were done and the occurrence of fraud was proven to be reasonably high, it was felt it is better to avoid selling insurance in those cities because rather than putting in place some very elaborate risk management measures like fraud prevention, fraud detection, and so on and so forth, which has cost because risk treatment has cost. So it may be better to avoid taking that risk in entirety. So that's an organization's call. To reduce is the essence of this entire framework, which is basically you would like to manage actively by mitigating. So you implement mitigation actions. So these are the risks where the occurrence may be frequent or infrequent, but the impact is not catastrophic on the organizational objectives, and these are the business risks that need to be actively managed. So that will be the sum and substance of risk management, activity involved in risk management. What you share would be typically risks which someone else is better, positioned, better equipped to handle. So there's no point in carrying the risk of a fire accident. If you have factories, it's better to go for an insurance policy. There's no point in carrying the currency risk if you can go to a bank and buy hedging contracts. So there are elements of risks which can be actively reduced by sharing. So those are some of the examples. Now, these are the 4 traditional risk treatment methods which were usually considered to be the ones accept, avoid, reduce, share. The one which COSO 2017 has added, and it makes a lot of sense to me, is pursue risk. Once you learn how to effectively either accept or avoid, reduce or share, to the extent you are accepting risk and you're reducing the impact of that, and you're managing it very well, then the time to pursue the opportunities, accept the risk to achieve improved performance. So pursuing risk is now an integral element of enterprise risk management framework, and this is the circle, this is the linkage between risk management and the CAs who are in practice. Because once you are able to yourself become experts in this entire enterprise risk management framework, tools, techniques, processes, practices, you will be able to help your clients do one of these 4, which is either accept, avoid, reduce, share, and then work with them or help them, support them, and make them successful in pursuing risk which they are beginning to master, beginning to get better at. And through that, probably there'll be some very good practice areas which will emerge. Some of those I had talked about in the context of the last session as well. So keep in mind these 5 potential treatments: accept, avoid, reduce, share, and pursue, which is around the opportunities. So risk management no longer is about managing risks only, it is about risks and opportunities. So moving on. Now this is the part where I'll talk a little bit about ERM and internal audit. There are linkages, and Vijaya Lakshmi talked quite nicely about some of these concepts, and even Nandaji in his initial talk also, he had keynote address, he had covered a little bit about this, but let me explain it from my perspective. So there are let me first explain the first 2 columns here. So the first column is about core internal audit roles which are naturally integrated with enterprise risk management. Now the point to consider here is, the traditional view of internal audit, as Anuja also talked about, was about probably, all right, you help keep an oversight of controls, you keep an oversight of process compliances, and find areas of cost savings. So that's the role. But that role is indeed changing. Now, risk-based internal audit is becoming a reality. Now, internal audit plans no longer can probably be framed or drafted in isolation without factoring in the inherent and residual level of risks embedded in the processes. So for an audit plan to be risk-based, it's very critical for the internal auditor to be very well versed with the enterprise risk management frameworks. That is the only way. Now, how will both the earlier speakers talked about internal auditors adding value? How will the internal auditors add value? It is by prioritizing audits through their audit plan, by virtue of selecting, prioritizing processes and business areas where risk, the management, effectiveness of risk management is of a critical and a strategic priority. Once those areas start getting managed well and supported well through internal audit, obviously the business performance and value addition will be much better. The second part, internal auditors can, and through the audit, when the audit is going on, while they will look at the processes, they can also give an assurance to the management and to the risk CRO, if there is a CRO, that risks are correctly stated and they are getting evaluated. Because through the audit, an internal auditor will identify, will be able to, internal auditors by virtue of the training will be very good at identifying risks, which I talked about briefly a couple of slides back. So they can provide an assurance whether all the risks are identified or evaluated, analyzed or not. So that's a value that can be added back through the audit process. Then through the audit process, internal auditors can also give an assurance that the mitigation actions which the company or the business has selected are, firstly, is it only on the paper or are they being actually implemented? And if they are being implemented or if they have been implemented, what is the effectiveness? Are the mitigation actions in place and are they effective in the context of and commensurate with the scale, size and the complexity of the business? So that's the third area which they can contribute. They can get into evaluation of the risk management process itself as a neutral party, because internal auditors are not really biased with any operating process or the operating environment. So they can come and evaluate the process itself. They can also evaluate the management of risks, whether it's happening, and reporting it back to the board, to the shareholders. Listed companies are now required to give a detailed description and explanation of the risk management through the board report, in the governance report, as well as the integrated report. So internal auditors, so these are very, very closely aligned roles for internal auditors as additional practice areas, which they can start talking to their clients, and then they can say that, look, here are additional scope which we can probably perform. Moving on to extended roles, as I'm calling it, there are some additional ERM activities or opportunities which can be probably looked at by the internal auditors. They can facilitate identification and evaluation. I talked about this. So by virtue of the training, by virtue of the orientation, by virtue of the technical competence, an internal auditor will be able to identify risks much better and faster probably than an operating manager, let me put it that way. So this is one area you can go back to your clients and say, look, we can help you identify or at least validate your identification of risks, and we can help you evaluate it. Objectively, we can put a framework to quantify inherent as well as residual risks and help you. Internal auditors can coach management in facilitating the risk response. Now, the five areas we talked about, accept, avoid, or even pursue risk, for example, or manage risk. So which is the best response? Applying our professional knowledge, professional experience to that, and then helping facilitating this appropriateness of the response is again a role which internal auditors can play. Coordinate ERM activities within the company, because risk registers have to be prepared, risk registers have to be updated, KRIs, key risk indicators have to be identified, they have to be collated, there is a MIS on KRIs that needs to be prepared. So a lot of that work and consolidate the risk reporting, which can also be facilitated by internal auditors. They can get into managing a full-fledged ERM framework for their clients, completely outsourced in an outsourced format. Champion the risk management philosophy within the client company, and then also help the boards of their client companies draft develop an ERM strategy. So the point I'm making is there is a good amount of synergy between the role of an internal auditor and the role of enterprise risk management. My own personal view is that over a period of time, see, there is this entire new concept of vigil mechanism. How companies, how businesses are setting about managing, keeping a vigil on the business and around the controls and around the reporting. Internal audit anyway is a very key element of vigil mechanism. But at the core of vigil mechanism, at the core of a robust vigil mechanism framework, there are two major frameworks. Firstly, it is ERM. The second one is IFC, internal financial controls. The two put together can really give a very dynamic visibility to all the key stakeholders, be it auditors, management team, boards, KMPs, of the effectiveness of. Now, risk management is a core in a vigil mechanism, and of course there are various elements that feed into the core which make this vigil mechanism very, very effective. So clearly, from my perspective, I would urge, I would suggest, I would encourage all the practicing chartered accountants to consider this extended role, going beyond internal audit. While if you're only restricting yourself to internal audit, probably the first column gives you opportunities to value add, to add more value to your audits, even if it doesn't come to you as a separate assignment. But the moment you start, calibrating and aligning ERM in your audit approach, what you will experience and your clients will experience that the benefits they are able to derive, draw, and realize will be far, far, far better than a pure internal audit only. The third column is equally important, and that's the reason it's indicated in red. Roles, ERM roles that an internal auditor should not undertake. So which are the roles where, there needs to be, from an independence point of view. So first one is setting the risk appetite. Now, the risk appetite is the domain of the company's board, because they are the best, from a governance point of view, it is the board's responsibility to drive enterprise risk management in the company. And they are the ones, because they guide the formulation of strategy. In the context of strategy, it is the company's board who should prescribe, describe, or define the risk appetite, not the internal auditors, and even not the management. The management can propose, but then it is the board which has to authorize and approve. Similarly, the internal auditor cannot take the responsibility of either deploying the risk management processes or managing the risk actively. Then they get involved in the process, because the moment these are first line of defense activities. For somebody said it is first 3 lines. I also got no defense word has been dropped. So the deployment of risk processes and managing this is the first line role which needs to be done by management or the process owner, not the internal auditor. Similarly, internal auditors should avoid taking any decisions and implementing risk. So it's not their role to decide which is an appropriate risk response. That's the management's role. An internal auditor can help the management arrive at the right risk response, but not take a decision or prescribe a decision. Similarly, implementation of mitigation action is a process owner's responsibility. It's not the internal auditor's role. Neither can they be held accountable for managing risk. So, as long as you have reasonable clarity, you have reasonable visibility of the do's and how basically, as a practitioner, you can get into newer areas, you can get into some very vast areas, some high value adding areas. Definitely, there's a lot of value to be added, value to be contributed, and I'm sure through that, newer practice opportunities will emerge for all the practicing CAs. So that's all I had today. I guess we have a time constraint because we need to have a Q&A session. But again, thank you very much for listening to me and inviting me to talk on this subject, which I am very passionate about. And I will be happy to take any questions which might come on this subject. So I'll just stop sharing my screen, and Shalini, over to you. Thank you.
Thanks a lot, sir. To such a vivid presentation, giving clearly the view of an internal audit, what actions we should take, what practice and what not we should indulge in. It's an excellent presentation. Now, I would like to take a few which we have received. The first question is for ma'am. Asked by Nai. Could you please detail about dynamic risk assessment, how to approach and manage dynamic risk assessment? Yeah, ma'am.
Is this question for me, Shalini?
Yes, ma'am. The member specifically asked it for you.
Yes. So when we say dynamic risk assessment, like Neeraj clearly explained, risk assessment has to be done holistically. And by dynamic risk assessment, what we mean is typically the organization does a risk assessment once in a year or once in 2 years as per the comprehensive ERM framework. When we say dynamic, it is the business environment that is very dynamic. The risk assessment should be in tandem with the changes in the business environment, should be equally dynamic. And only then our control framework will be in line with the risk that the organization is facing. Otherwise, we will be fighting last year's risk in this year's audit program, which will not be beneficial to the company. So in that sense, we must constantly review the risk. So as we progress on a quarterly or on a half-yearly basis, we must relook at our risk register regularly to see, do we have to add? Has the impact of any risk gotten enhanced? Has any risk gotten eliminated? Have new risks gotten added? So COVID has presented, for instance, a lot of risk, multifarious risk for different kinds of organization in different sectors. And now some of these risks have been mitigated through government action, through lifting of lockdown. Some risks have been addressed, but some are still ongoing. So we'll have to constantly watch, and we must also be conscious not only risks in our domain, in our organization, we must also extend it to our external stakeholders and partners. So it is not only necessary to be aware of what risks we are facing in our industry, but go back to your suppliers, go back to your vendors and see what risks they are facing in their, for a manufacturing organization. It could be a raw material supplier. Is he facing a commodity risk? Are commodity prices increasing, for example? Now steel prices are firming up. So you have to go back to your vendor and do a risk assessment for them as well. So in that sense, we must be broader and we must keep a risk register.
Nicely. I would request any of the speakers would like to add anything to this. Neeraj-ji? Anuj?
Yeah, sure. So I guess Vijay Lakshmi has quite nicely summarized, articulated the various elements of identifying risks. One critical element of risk identification is related to involving or enrolling the process owners into this entire framework, in this entire process, because it is actually the process owner, the frontline person who is managing the process. He or she will know the risk best. It's not like a risk manager sitting in a corporate office who can just remotely decipher or identify. So it is how close you take the entire risk management to the ground, and how do you really enroll the process owners, and first and most important, equally importantly, are they educated enough? What kind of communication and training programs are organized or conducted to make them aware, to make them even aware that every business decision that they will take will have elements of risk. There will be no business decision which will not have risks. So helping them identify, okay, now in this decision, this is the risk that you will deal with. And if you have thought through the mitigation or response actions, probably the outcome will be more predictable and the performance will be more resilient and more sustainable. Now, this takes a little bit of an effort. A lot of business managers, by virtue of experience, are doing that. It's not that this is not nothing new. They've been doing it, but it is by virtue of many years of business experience and by learning through the hard way. Some errors and some mistakes get made. But I guess now we are going through very, very turbulent times as well as fast changing times. The time has come to probably make some of these concepts more formal, as well as percolating their entire knowledge of how to identify risk, how to get aligned with the consequences of risk, more closer to the process owners by way of formal communication and training programs. So that's what I would just like to add on top of that.
Yeah, that was a very nice point given by Neeraj, sir. In fact, what we find in practical sense is that the operational managers are most aware of the risk in their areas. So when we as internal auditors have conversations with operational leaders or even people on ground, so many a time when I do a project audit, when we go to a project site and talk to the people, talk to the engineers, they actually tell us a lot more information on what is exactly happening with the client, what is happening with the government policy, and how is the project progressing. So we need to be very closely connected to the ground and understand both internally and externally. So the risk antenna has to be up all the time, and the signals we must catch the signals that the people are telling us. So they may not articulate it or tell us as it's a risk that we are looking at, but definitely if there is an element of risk that if you are aware and you can catch, that would be wonderful. And this is a very nice point. We must be very connected externally and internally with the operations people. Thank you.
Yes, Anuja, madam. Would you like to say something?
Actually, I think what Vijayalakshmi and Neeraj have covered actually covers the whole part of it. The only point that I would like to add is, and going back to the service offerings which I have been talking about, is I think we as internal auditors should also have a very, very good study of the peer companies that our client operates in the industry, and what are the risks that the peer organizations are considering. And that, to Vijayalakshmi's point, I think will go a long way if we put up some perspectives in front of our clients, and then they really come up. A lot of times, as Vijayalakshmi said, they are not able to really articulate or kind of envision the risks which might be existing, and as they are ever evolving and dynamic. That's the only point I would like to add. I think otherwise Neeraj and Vijayalakshmi have really covered all the points.
Great, great. Now, madam, one question which I normally ask all my speakers is that this is a series of mentoring small and medium practitioners. So what are the areas of professional development you feel the small and medium practitioners can be, because three of you represent industry. So which areas you would like the involvement or indulgence of and similar peer company in which you work? If you could suggest some areas where they could pitch upon, that would be great, madam. We can start with Neeraj, then Madam Vijayalakshmi, and at the last, Madam Anuja. Neeraj.
Sure, sir. So it's a very good question. So now, see, there are many areas where the practitioners, chartered accountants can pitch in, can set in. I'll just talk about a couple of them. Working capital management is a big opportunity for adding value, and mostly large organizations. So if you look at a manufacturing organization, for example, there are opportunities to get better at inventory management. There are always opportunities to improve the receivable management, and so on. So working capital, contributing to working capital management in some ways is one area which I'm sure by virtue of training background, chartered accountants can step in and can help. Compliance management is another area, because now with increasing instances of governance failures that we keep reading about, experiencing about, the role of it's I guess right or wrong, but then the expectation that the finance folks ought to have known, they should have known, and they should have played a role in preventing, avoiding, or managing a potential fraud or a potential governance failure. Again, those are areas where chartered accountants are we're all equally equipped with training by virtue of our background to step in and at least help managements to identify potential control weaknesses, control failures, if they are about to happen, and so on. So these are the two areas, Nandaji, I think what is needed, because I also every year regularly I go to campus for recruiting freshly qualified chartered accountants for our company. My own sense is the chartered accountant fraternity is quite intelligent. A little bit of, I think somebody talked about it, how to articulate, how to present, how to become more extroverted, and how to express the thoughts in a very cogent manner are some of the areas, I guess, people might want to focus on, and I think the opportunities are quite huge.
Ji, madam, Vijayalakshmi ji.
Yeah. So I have three areas where I believe internal auditors, chartered accountants can actually help management. One is in the area of contract review, where we see that especially post-COVID, the organization has to scan all the contracts, and there are several areas where old contracts have not been renewed, the terms need to be revisited, and by virtue of knowing what's happening with your other clients and handling multiple clients in different sectors, we internal auditors are quite qualified to do a thorough contract review and suggest opportunities for either cost saving or enhancing efficiencies, and this will be really beneficial to management. The second area would be in the field of data analytics, where, for example, the CFO requires continuous and comprehensive monitoring on a daily basis. So this is where internal auditors, by virtue of having the depth of accounting and finance and the perspective of control, so they can help evolve an MIS or a dashboard either for the CFO or the CIA to kind of help their work run smoothly and enhance the data analytic capabilities of the organization. And third, internal auditors can also look at helping their clients in implementation of automation tools. So these could be in the area of, let's say, robotic process automation, of scrutiny of bills, contract readings can be automated, and some of the audit planning work is also can be automated for companies or clients that have in-house internal audit teams. So while there are several softwares ready to implement available in the market, the implementation itself is a challenge for the management today while we are battling other things. So internal auditors can certainly help out in these three areas and add value to their clients. In terms of capabilities, like Mr. Neeraj rightly said, you have to be more articulative and very effective communicators, and they should also equip them with skill sets like knowing R or Python language. That will actually help chartered accountants to write codes and programs in data analytics and not rely on fresh engineers who have no idea on what is finance. So this is speaking out of practical experience. So you need a bridge between the techies and the client. So this group of small and medium practitioners are ideally suited to be that bridge between the technical people and the client, and also the agility. They should be quite fast and quick in their response to client and in their deliverables. So if they are able to deliver with speed and agility, I think it will go a long way in helping our SMP colleagues in adding value and building up and enlarging their practice. Anuja, over to you.
Yes, madam. Truly explained the right way when they can bridge between the client and the techies so that things can move in a smooth fashion. Yes, Anuja, madam. Your words.
Yes, Nandaji, I think my entire presentation was all about only examples of how SMPs can really get this.
Yes,
but
madam.
Yes, but to taking the conversation forward and the points which Vijaya Lakshmi and Neeraj put forth about bridging the gap, I think, and more specific to the IT industry from where I come from, I think a lot of IT corporates today are, struggling to really make this transition to the new ERP environments and adopting different ways of really maintaining books of accounts and those kind of things, and where the complications at times have reached to such level where the implementations have taken so long that they have started having impact on the revenue and accounting and those kind of very basic things. So I think having inculcating this technical aspects and technical competencies that I was talking about and getting into the role of functional consultants is one area I think where the small and medium practitioners can definitely add value and help organizations really accelerate their transition, ERP transition process. Again, specific to the IT industry, what I can say is that the largest cost sitting in my P&L or sitting in the P&L of any IT company would be the employee cost. So anything and everything to do with the services industry, anything and everything to do right from payroll to any kind of employee related expenses, it could be visas, it could be, resource management, anything that they really have to bring to the table there through their understanding of the business is a sure shot recipe, I would say, that any and every corporate is looking for, big and small. The IT world is really a huge place with a lot of opportunities. And last but not the least, once again, what really sits in my assets of any IT industry are the software licenses. Management of software licenses is another big, I would say, for a lack of better word, I would say a headache for most of the IT companies, how they really manage their IPs, how they really manage their software licenses, and how they really, get rid of the penalties that really are slashed and slapped upon them from the OEMs. So coming up with innovative methods of in some automated tools, those kind of things, if the SMPs can really help the industry and the in-house audit teams and management with, there is a lot of scope and a lot of potential in those areas. So these are the three things which I would like to specifically comment on.
Thank you, madam. Thank you so much. One more very pertinent area where we need a lot of focus. The small and medium practitioners need to focus on two aspects. One is technology, another is networking skills. So over to three of you in the same order as earlier. What you feel left? What technological impetus they should have? And more importantly, how network can change their entire thought process. Over to Mr. Neeraj.
Thank you, sir. Yeah, so I'll just pick on from where Vijay Lakshmi was talking about. So now we are entering a phase where the finance processes, as we have all learned when we were growing up in the profession, be it accounts payable, accounts receivable, general ledger accounting, etc., the financial reporting, there was a fair degree of manual involvement. My own prediction is in the next maybe 5 to 10 years, most of these processes will become either fully digitized or automated. Now, with the advent of tools such as RPA, with the advent of with digitization becoming much more affordable as well as within reach, quite a few of these recurring repeatable processes are bound to get automated. So the role that chartered accountants can play in understanding some of these process automation, which means that they need to understand what RPA technology is all about, what are the use cases, how they can help their clients implement some of, and these are all going to result in high productivity and cost savings therefore. Similarly, reconciliations, which used to be a manual process, so through technology they can help. In the times to come, blockchain is going to also still evolve. So for a young practitioner, it is I feel it's going to be very important to start learning. GST in front of our own eyes in the last 3 years, from where we started with a semi-automated to a more automated and absolutely automated regime with e-invoicing, and now e-way bills also becoming integrated with the e-invoicing. So slowly transactional workload is going to reduce, and my recommendation will be for even budding chartered accountants and the ones who have recently started their practice to invest in their themselves and invest in their knowledge on some of these counts.
Yes, madam.
Yes. So you had 2 points, sir. One was on the technical aspects where they can brush themselves or make themselves experts. More than the functional, I'm sure that most of our chartered accountants are quite well read and updated on the accounting standards, the auditing standards, the tax requirements, and so on. What they need to look at is adjacencies, where they look at specifically some of them. It will help if you have a formal training in management skills in terms of selling. Actually go through an MBA program, even a capsuled MBA program will help, and also look at qualifying or honing skills in the IT areas. In today's world, you can acquire degrees even through Coursera online. Some of it is free and some of it comes at very low cost from very reputed international global universities. So those places where you can get qualified as in terms of fraud detection or in terms of IT skills. So that is one area where they should develop and build skills in adjacencies. And economics is one area where chartered accountants also have to focus, because what is happening in the country and worldwide, they would understand better in terms of what is the news and events, the economic impact on various industries they need to understand. So these are the 3 areas which will help immensely the small and medium practitioners. And in terms of networking, one thing that they could also look at is where we have some of these automation tools, audit management softwares. A lot of these things are available in the market. They could also look at becoming franchisees who does not have the resource or the bandwidth to implement. He can actually take a franchisee and become a franchisee for some of the products. And that will give them an additional edge over the other peers than being a plain vanilla chartered accountant or an internal auditor. So this is what my first thoughts on the subject, and over to Anuja.
Yes, I think between Neeraj and Vijayalakshmi, once again, that's the advantage of probably speaking, being the last to really answer the questions, that most of the points really already get covered that are playing on your mind. But yes, just to add my 2 cents, sir, on the technical competency that you asked about, I in fact concur with Vijayalakshmi here that yes, technical competency is essential, but honing the softer skills within you and really being more presentable and more management skills and not restricting. I know it's a great fit for all of us, not only for SMPs, for all of us when we pass the chartered accountancy exam. But today the need of the hour is that we really do not stop at just our CA degree and really get some additional qualifications to improve our technical competencies, IT competencies especially. I mean, gone are the days where we could say that I am a chartered accountant and I do not know how to run a SQL query, or I do not understand BI, business intelligence, or I do not really understand what RPA is. So we really have to, and Vijayalakshmi brought a very interesting point, like courses available on Coursera or Udemy, and this is in fact, I always encourage, in whichever sessions that I really go for mentoring, I always speak about how these small investments in our own development are going to really take us a long way to hone our technical competencies and be more sellable in the market. But yes, having said that, it is also extremely essential to hone the softer skills and really, I would say, in fact, if required, even really go for some personality development courses where you know how to really present yourself and tell yourself to the client. You might really have a lot of offerings that you have to make, but if you're not able to sell them and not able to break the ice, then I think there is no way forward. So those are the couple of important things. On the networking front, I think what has really helped some of my peers and my juniors, and what I typically encourage is that there are a lot of small study circles, and a lot of our own institute has study circles even in really very small towns and even in big cities, and that's a good way of really networking. So many such sessions that get organized. Speak up, ask questions, talk to the people, and then maybe locally we can do something to come together and really complement each other in the areas of expertise that these SMPs have, as against really looking at each other as competitors, more of complementing each other's. And if they really come together and make that as their way of moving forward, I mean, I win, you win, and we together come together and really up our game. So I think these are the things which the SMPs should really concentrate on for bringing more to the world and bringing more to their own success.
If I may add just one point, Nandaji, if you permit me. As chartered accountants, I guess it's very important to carry a pride that we have the capability, we have the potential, and we are trained to contribute and add value. And that pride in the positive way gives confidence, because today in organizations and in industry, the role of chartered accountants in practically every sector is very well recognized, very well appreciated. So there is no reason why chartered accountants who are in practice should not be at the same level of professional pride. So the first thing, a very important element, is to take pride in what we do, to be passionate about what we do, and use that passion and pride to then present and represent ourselves, which will then help in elevating the level of our work. That's one more point which occurred to me.
Thank you, Mr. Neeraj. All of you made very scintillating examples so that the small independent practitioners could be inspired and they're able to put into perspective the goals which they have decided when they wanted to do CA. Our profession is a great profession. At times we are surrounded by criticism also. I'm reminded of a couplet, as I'm in the habit of saying couplets. The couplet says, कि तारीफ की चाहत तो नाकाम लोगों की फितरत है, तारीफ की चाहत तो नाकाम लोगों की फितरत है, काबिल लोगों के तो दुश्मन भी कायल होते हैं. So we are a profession who, in spite of getting criticized, always scales highs and works in that tandem. Ladies and gentlemen, all good things in life have to come to an end. So our interaction also has to come to an end. And I have my very worthy Vice Chairman, CA Prasanna Kumar, who would now give the concluding remarks and give the formal vote. Brother Prasanna, you are there?
Yeah. I am in the meeting only.
Great. So Prasanna Kumar belongs to Visakhapatnam, and today both of us were together. I just reached back from the institute. He's there in the institute. The examination is going on. And Prasanna is a very hard worker. I have seen him spend sleepless nights to ensure that Mofsil town members and students have peaceful sleeps. So over to Brother Prasanna Kumar for his words of wisdom so that things can be concluded. Brother Prasanna, the dice is all yours now.
Yeah, thank you. The respected CS Nanda, the chairman of IASB, and the speakers of the today's session, CA Vijayalakshmi Suresh, CA Anuja, CA Neeraji, and my dear participants in the webinar. So good evening to all of you. It's my proud privilege to thank all of you together for the excellent presentation made. The topics chosen today are very much relevant and a thought-provoking topic.
I think we have lost the sound for Mr. Prasanna.
Yes, we are not able to hear him.
And there might be some network issue. On behalf of Prasanna sir, I would like to thank one and all faculty members, especially for their wonderful presentation and all the participants for watching this. Again, please.
He's back.
Yeah, thank you. My connection got disconnected somewhere.
Please carry on.
Nandaji?
Yes, you're audible.
Yeah. There's some connectivity problem. Yeah. So as I was telling, the today's topics have been very thought-provoking topics. So they may not be straight away carrying out the audit, but this really helps us in enhancing the value in carrying out the internal audit. Madam CA Vijayalakshmi, she made a very good presentation about the internal audit relevant in a situation where the situation is volatile, uncertain and complex and with a lot of ambiguity. So madam, you have excellently presented this particular topic. Thank you very much for the scintillating presentation that you made and thought-provoking presentation you made, madam. Thank you very much. And CA Anuj, you made such a good presentation on internal audit enhancing your service offerings. This is the very topic where, in a situation which is relevant to SMPs, why they want to take up an internal audit of SMEs. SMEs, they got a doubt. They want to have internal audit, but they don't know what should be the scope, what should be the, report they expect from them. Like that, there's a lot of confusion with them. Large industries and big business enterprises, they got separate department. They know what is what. Whatever she has explained today is very much relevant to SMEs so that they can plan their internal audit very well and they can have a good scope and see that they derive benefit out of a lot of value addition given in the internal audit. Madam, thank you very much for the excellent presentation made, madam. Thanks a lot. CA Neeraji. So Neeraji has very well covered the growing relevance of enterprise risk management. Enterprise risk management is a buzzword for the last 10 years. At least a little more than a decade. So he has done very much good presentation he has given, which is relevant to the business enterprises. Sir, thank you very much on behalf of the IASB for the good presentation you made. And I thank the CS Nanda, who is the architect of this mechanical SMPs program on internal audit. So he is the person conceived that we are only supporting activity, we are doing it, so that all the SMPs, which is the heart of 98% of the practice in India, or SMPs, and all of us are going to get a lot of benefit out of this one. I jointly thank all three of you for giving the clarification of the queries raised by CS Nanda on internal audit very nicely again. Last 15 minutes of the question and answer session was very much relevant. I'm sure that's the grand finale that you have made. Thank you jointly for the excellent efforts you put in. Thanks a lot. So all the best. We'll keep meeting again.
Thank you all.
Thank you.
To all participants, Brother Prasanna, Madam Shalini. I want to tell you that our next webinar is planned on 11th, 6 to 9 in the evening. We have to keep on studying, honing our technical skills and performing par excellence with all our counterparts. So I want to thank you all. Thank you so much. We'll meet on 11th next Friday, 6 to 9. Thank you. Thank you so much.
Thank you. Bye.
Thank you so much, sir. Namaskar. Thank you so much. Thanks.
Bye.
Thank you.